plenty of space up there.
Yeah. Are you ready? Sorry. Are you ready, or are we waiting? You said Vanderpool? You said Vanderpool's calling in?
I don't have a gavel, but we're calling this meeting to order of the San Joaquin Valley. I don't need a gavel. San Joaquin Valley Insurance Authority. I never use it anyway. We have folks that are live streaming and they're calling in via Zoom. So at this point in time, we are going to, for those of us in the room, we're going to do the Pledge of Allegiance. So we all stand. Salute, pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. And if we could please begin with roll call.
Yes, please unmute if you are on Zoom when you register your attendance. Director Brandow.
Here.
Director Crocker.
Here.
Director Magsig.
Here.
Director Mendez.
Present.
Director Pacheco.
Here.
Director Sheklian.
Here.
Director Vanderpool.
Very good. Thank you. Next, we'll go to item 4, approval of agenda. Do we have a need to edit or do anything? Otherwise, if not, we have a motion by Supervisor Magsig, a second by Supervisor Sheklian. Any further comment? Hearing none, all those, well, let's do roll call vote. There we go.
Director Brandow.
Yes.
Director Crocker.
Aye.
Director Magsig.
Aye.
Director Mendez.
Aye.
Director Pacheco.
Yes.
Director Sheklian.
Aye.
Motion carries unanimously. Council, we do not have any need for closed session, correct?
That is correct. No closed session today.
Very good. So we'll move to item 6, public comment. Is there any member of the public wishing to speak on matters within our jurisdiction but not on today's agenda? Please state your name, address for the record. Do we see anybody? Hearing and seeing none, we'll move on to item 7, approval of the minutes. Any questions or comments regarding the minutes? Otherwise, I will entertain a motion. We have a motion by Supervisor Sheklian. Second by Supervisor Magsig. Please call the vote.
Director Brandow.
Yes.
Director Crocker.
Aye.
Director Magsig.
Aye.
Director Mendez.
Aye.
Director Pacheco.
Yes.
Director Sheklian.
Aye.
Motion carries unanimously. We'll go to item 8, receive an update from Auditor Treasurer on cash flow projections.
Ladies and gentlemen, members of the board, good morning. We're going into cash flows for the first 2 months of the fiscal year and what we can expect for the remaining part of the fiscal year. So on the first slide, you will see what we had initially projected from the first 2 months of 2021 versus what we have actually received. And as you can see, our activity remains strong. The amounts have kind of varied a bit, but as far as the timing, as far as what's being dispersed out versus what's being received in, is very consistent to what we have expected. We have seen a very small rise in overall revenues from member contributions, which is significant, especially during the pandemic time. So our contributions are still good. However, we've also seen a slight increase in our expenditures, namely from daily claims from PPO and EPO disbursements, which means that that activity is starting to normalize, if not kind of increase. We saw this last year, but we kind of expected this to occur, what with pandemic starting to maybe people going back to to see their physicians and doctors' offices opening, normalizing their hours. So it's an increase of about 5.6%. We expected 165,000 a day, and right now we're at 175,000 a day, and we expect those figures to remain consistent at least through the first part of this fiscal year. So to go to the next slide. This will tell you what our average is going to be for the rest of the year. The first 2 months are based on actuals. The last 10 months, of course, are projections. The little dip you see in September is only attributed to when we're going to be receiving County of Fresno active. So it's basically just a timing issue because there's going to be only 2 actives received right in the middle of those months. So it brings the averages down a little bit during that period. But we do expect to see that steady increase go for the remaining of the fiscal year. So that's looking strong. Another thing to note is that these projections are purely based upon member contributions and interest earned in our investment pool. It doesn't consider other revenue sources such as pharmacy rebates, reimbursements from overcharges, things of that nature. So right now we're looking to see about, at the end of the fiscal year, roughly about 28 million in cash reserves funding in our investment. So anybody have any questions about that?
Any questions? I think you're off the hook. Thank you. Next, we'll go to item 9 and hear about our financials.
All right. So in the fourth quarter of 2020, you see that we ended with a, just going down to the figure here, not taking IBNR into consideration, which will appear on our audited statements. We ended with a net position, a positive position of about 6.1 million, which is 5.5 million greater than what we saw in the last quarter. Just going through the items on here real quickly. 21.9 million is part of our claims reserves, our claims funding, our investment pool balances. We expect to receive over $90,000 in interest from our investment pool, what we have invested in the county treasury, County Fresno's treasury funds. And there's a $977,000 ABC advance deposit we had with Anthem that is being moved from a non-current to a current receivable because we are expecting to receive that back at some point during this fiscal year. We have, as far as accrued payables, from I believe the 18th of May through the 30th of June, about 3.8 million in payables, and other unpaid claims expenses such as legal fees, RX claims, and like that. So we're ending, based upon what we see right now, we're in a 6.1 million position. Next slide.
Real quick before we go to the next slide, I have a question. So if we did take into consideration, and I know we don't have it on here, nor should we, but appropriate reserves, IBNR, and the like, we still would be in a deficit position. Is that correct?
Based upon, we're working through the audited statements right now. Based upon that and taking into other adjustments for accruals and reversals, preliminary figure shows that we may actually be at a net position of closer to 3.8 million. That's what we're projecting for right now.
Director Masek, I'll just jump in here. Paul Nerland, SJVIA manager. When we get to the later reports talking about our IBNR and our renewal, I think the question you're asking is, where we should be, and Borden's going to speak to our progress in that regard. And I think you'll see that we don't want to celebrate too fast. We've got a long ways to go to get to where we really need to be. So this is good. We're going the right direction, but there's a lot of uncertainty with COVID, and so we'll speak a little more about that later in the agenda as well.
And the only reason I raise it up is as we deal with this singular item right now, this number can be misleading to the public. And I want to make clear that, we're still trying to build prudent reserves because of, the harm that's been caused by, I think at one point, us being down close to $21 or $22 million. So it's important for us to be very mindful of the fact that we need to be conservative moving forward, and we take into consideration all reserves that need to be built back up.
Absolutely correct. And while the position does look very good, like you said, because of the uncertainty of the future, but with the pandemic going on, while all of our liabilities are in a position to meet all of our immediate needs, we still have to take that into consideration as to, you said it's a small increase in disbursements we're seeing so far, but we need to keep watch on that, see if that's going to stay consistent or if that's going to increase even further as the fiscal year progresses. So well, it looks like we're in an extremely strong position to meet all of our financial obligations. We still have to be vigilant and ensure that we don't just go on a spending spree for what we got. Okay. Next slide will show the our actual receipts versus disbursements for the fourth quarter and the fiscal year for 2020. It's kind of hit it on last time with the pandemic hitting during the fourth quarter of 2020. We saw our inflow stay consistent while our disbursements dropped significantly because a lot of offices were closing, people were going to the doctors and so forth. So we saw a huge jump in our reserve by about $5.9 million. Our receipts were about 31 million. Our disbursements were only a shade under 25 million, which brings our year-to-date change in reserve. We had budgeted an increase in our reserve of about 3 million, but because of the way that fourth quarter played out, it kind of inflated that to a figure of 10.5 million, which is 2.5 times higher than what we had budgeted for. So, like you said, Supervisor, it's kind of misleading in that regard because of the way the pandemic hit, and we may start to see that kind of balance itself back out as this fiscal year progresses. Next slide. This goes to break down how the administrative costs are distributed. We had total disbursements in admin of about $2.5 million, and about 80% of that went towards litigation and legal expenses. Moving over to the next slide shows the cash flows throughout all of 2020. We started with a beginning balance of $3.4 million, and by June 30th of 2020, we ended with $22.5 million. That was an increase in our cash balances of about $9.2 million. And investment productivity continues to see a great increase. So while our cash flows are on the way up, and we're in a position to at least address any further difficulties caused by the pandemic. Does anybody have any questions on anything?
Any questions? So just to be clear, later on, in addition to talking about the IBNR, which I know is agendized, we'll also talk about other reserves and stabilization rate and everything. Okay. Then I'll save that for later. Seeing or hearing no other questions, we'll go to item 10, receive a consultant's medical, dental, vision experience reports through June 2020.
Hello, this is Borden Darm with Keenan. Good to be with you via Zoom. Would have preferred to be there in person with you, but I am a victim of COVID. I tested positive, shortly after our last board meeting, and I'm on the road to recovery, but still have kind of a lagging cough. So I apologize in advance if during my presentation I start coughing. Confirming what the auditor shared with us, I'm reporting on the experience reports through June of this year. All in all, it was a very favorable month. At our last board meeting, I reported through May. What we've seen year to date through June is about a $5.5 million accumulation just on the self-funded medical and dental plans alone. We are realizing a loss ratio on the medical of 88.3, on the dental 71.3, Vision 79.6. That Vision is fully insured, so we don't share in that program in and of itself. I think noteworthy relative to the medical plan is the fact that the EPO, we do have for County of Fresno, we have a parity program in place with Kaiser. And the positive thing to mention here is that the EPO is sitting in a positive position and outside of the parity. So the parity is going straight to the SJVIA's accumulated position. If you could, Marie, go forward to, I think it's the last page, which kind of shows all the different sources of revenue that right there, that's fine, thank you. You can see that we budgeted for the year approximately $6.5 million that we were expecting to accumulate. Well, through June and adding, we know that we received prescription drug rebates in July, and we also received the HMO, the Anthem HMO final accounting, which amounts for the $977,000. So that's a one-time of, both of those are kind of one, well, the rebates are a quarterly event. The final accounting on the HMO is a one-time event. Our overall position for accumulation this year is just under $10.2 million. So well above the projected 6.5 that we have. Obviously, a lot of that is due to COVID. And I would be cautious relative to saying those dollars are available for stabilization or loan repayment. I should say the dollars in excess of what was budgeted. But we do have those, we have realized those, at least on our calculations. And again, my report is subject to the auditor's validation. This is just the consultant's report. So we are in a good position. And I'll entertain any questions, or if you want me to go over any other details that are shown in the report.
Questions, comments for Borden? Go ahead, Nathan.
So, Borden, how long have you been battling COVID?
Well, actually, I got it from my son and my daughter-in-law, who they got it at their wedding. And they then gave it to me, and it's been about 3.5 weeks now. So I'm past the infectious stage. I feel very fortunate in that I must have had a very mild strain. I just have a cough and a little bit of fatigue, so hopefully I won't fall asleep during our presentation today.
Don't fall asleep during your own presentation.
I don't have COVID and I might fall asleep. So.
Yeah, but to make a positive, I've already signed up as a plasma blood donor to assist other COVID victims that are not as fortunate as I am, that had a much more serious strain. So as soon as I get over this cough, then I'll be clear to do that. So I'm looking forward to potentially helping others that are far worse off than I am with COVID.
Thank you.
Anybody else? Was that the end of that item, Borden, or did you have more on that?
Yeah, the only thing, if you look at this report, it shows 19 and 20. If we added 2018, and the only reason I say that is 2018 is when we kind of started this report. If you look, if we added up the calculated accumulations for each year, I come up with a number of about 23.2 million. Again, that's subject to the auditor's validation, but that's what we've done over the last a little over 2.5 years, is about 23.2. And I mentioned that when we get into the renewal, we'll talk about reserving and other things, but I wanted to have you keep that number in mind, that according to the consultant's report, we're at about 23.2 in accumulation over the last 2.5 years. And that concludes my report.
Very good. Thank you. We will go on to item 11, receive and accept our actuarial certified IBNR report.
And I'd like to introduce Christine Huff. She is Keenan's actuary, and she's here today to report on the IBNR.
Good morning, everyone. My name is Christine Huff with Keenan. I am, like Gordon said, I'm an actuary. And at Keenan, we have a reserving system that utilizes Bonhoeffer-Ferguson method, which is a method that is known to produce a minimal amount of standard deviation errors. So based on this method, we have estimated the IBNR reserve as of June 30th, 2020 for County of Fresno to be $4.4 million, including the 15% margin, and for County of Tulare to be $2.6 million, including the 15% margin. And in my opinion, these estimated reserves are sufficient to cover the unpaid claims as of June 30th, 2020. So any questions?
Chairman, you mind if I ask a question?
Sure.
Just a couple comments, Christine, to what you said. Can you explain to the board when you say the 15% margin, what that means? And also when you talk about the actuarial method that you referred to, this is standard in the industry, correct?
Yes, that's one of the method. It's a two-step method that uses completion factors by looking at the historical payment pattern, and also it's using the expected incurred claims per employee. And the 15% margin is to cover any fluctuation in future claims that comes in later, and also to reflect the retroactive adjustment.
And Christine, is that industry standard, and you consider that conservative?
Yes, it's conservative. Actually, between 5 to 15% margin, it's normal. It's just, we are on the more conservative side with the 15%.
Thank you.
Sure. You're welcome.
If I could add, adding the 15% margin gave us a total of $7,081,000 for IBNR. When Christine did her December 31st valuation, we came up with a number of $7,096,000. So technically, we're requesting that we reduce the IBNR accumulation by $15,000, and our estimates show that will still be that $7,081,000 will still be with 15% margin built in to be a very conservative number. I'd also like to comment that we've set aside $89,400 for City of Marysville that left our group a year ago. I'm sorry, at the beginning of this year. And to date, through June, we've only realized $14,297. So we will continue to monitor the run out payment on that group. After 2 years, any balance will return. Well, it's already with the SJVIA, but will be deducted from the IBNR total amount that needs to be held and would be available for other reserving elements.
So just, so the IBNR, the 7.1 million roughly, is set aside outside of what we looked at earlier in our cash flow documents, that it's a separate fund that's outside of where our net position is. That's in addition.
Are you asking Justin to respond to that, or would you like a response from me?
Borden, if you can, you're more than welcome.
Yeah, it's kind of interesting. Obviously Justin's liabilities show the $9 million loan, and so, but didn't show the IBNR. The IBNR, if you ask myself, And like I mentioned, we have 23.2 that we've accumulated. So from my perspective, the 7.1 million is funded, but it was left. It's not on the auditor's report as Justin reported.
Very good. Any other questions? This is action, I believe, to receive and accept this. So if there's no
Chairman,
further questions or public comments?
I apologize. If I can just clarify one thing Borden said for the record. Borden, this is not a fund. This is an outstanding liability, isn't it? Just to be clear.
Yes, I apologize. Yes, the IBNR is an outstanding liability. It can be one of three things: unfunded, partially funded, or fully funded. And in our estimate, the 7.1 is fully funded based off the $23.2 million accumulation.
I can add something as well. This is something that if the board prefers to see on our books, we do not report this item because this IBNR is not generated by the auditor's office, but it can be tracked in our books, and on an annual basis when the IBNR report is presented to the board, we can adjust it in our books, the change in IBNR, so that way it is reflected in our unaudited statements. It appears in our audited statements as a liability. And if you prefer to add that to our books as a liability so you can see it going forward, we can do that as well.
I think that would be helpful.
I'd like that too. I think it's a good idea for us, even though it shows up in the audited financials. I think as we do our unaudited statements quarterly, for it to be showing up there. That way, the board is fully informed as well as the public is if we're fully funded or not.
Yeah, and each of our unaudited statements says it does not include IBNR. But if you include IBNR, you get a more actual evaluation of our net position if it's there. And all we need to do is just adjust for it on an annual basis whenever we receive the annual IBNR reports from Keenan. If it goes up or goes down, we can adjust the outstanding liability accordingly.
And we provide an actuarial certification twice a year, once at the close of the plan year for December 31st. Christine does evaluation, and then again at the close of the fiscal year, June 30th, another IBNR valuation is done as well. So we'd have 2 updates a year for the auditor's office.
Very good. If there's no other questions or comments or public comments, then I'll entertain a motion.
I'll move for staff's recommendation.
We have a motion by Supervisor Magzig, a second by Supervisor Shucklian. Please call the vote.
Director Brandau,
Yes.
Director Crocker,
Aye.
Director Maxig,
Aye.
Mendez,
Aye.
Director Pacheco,
Yes.
Director Shucklian,
Aye.
Motion carries unanimously. We'll go to item 12. Receive and accept consultant's plan year 2021 underwriting renewal report, finalize and improve 2021 rates, fees, et cetera, et cetera, et cetera.
All right. This is myself. This is one of the things that I'll note. This basic difference between this report and the preliminary renewal report, which was delivered at the last board meeting. This one includes the month of June 2020 in the underwriting and drops the month of May June of the previous year. So we have the most recent 12 months of experience. This is consistent with the last 4 years of underwriting that we've done, that we've used. We've updated the preliminary with this. So we are being consistent. Again, I will note that our reinsurance program, we do not get final reinsurance costs until the fourth quarter. Excuse me. So at this time, we have a placeholder for the reinsurance with a 10% increase. When we do the marketing, we always look at a variety of different levels. Nothing will change there. We'll look at a variety of different levels at this point as well too. The final renewal did include the IBNR reserves that were just gone over. We added a 3% on the self-funded medical, 3% margin for County of Fresno, only a 2% margin for the County of Tulare, simply because relative to our accumulated position, Fresno needs to do a little bit of catch up. So we've adjusted those margin levels there. At the last board meeting, it was requested that we include an element of margin for COVID. And as you can see, inherent within the program over the first 6 months, as reported in the experience reports, we've already accumulated quite a reserve. We added another 2% to both counties' self-funded dental and medical programs, so that we can account for any spike in utilization or claim cost that we might see. That 2% adds about $1.5 million to the medical program and about I'll call it $73,000 on the dental program. And with that, the renewals were prepared. If you could go to the next page, please. On an overall basis, the County of Fresno, for all lines of coverage, required about 3.41% increase. County of Tulare required a minus 2.61% rate decrease or cost decrease, and leaving the SJVIA in total with about a 1.69% increase. So from that perspective, we provided to both counties a variety of different options. I will highlight that the self-funded medical includes a total reserve component of about just under $3.5 million in margin that we're looking to accumulate, and that's just under $2 million margin built into the rates, and then, like I mentioned, just under $1.5 million for COVID as well too. The Kaiser renewal, in the past, we've seen very minor rate adjustments. This year, however, we saw a more significant rate increase of 9.82 for the County of Fresno. County of Tulare was 9.65 and 9.7. The impact of those large increases is somewhat mitigated by both counties in that in the past, rate decreases were not accepted and rates were held level. So it brought us into this year with an adjustment relative to those rates. So the net effect, for instance, for the County of Fresno, prior to the parity adjustment, the Kaiser rate actually was a minus 4.04 prior to the parity adjustment, and the County of Tulare was actually a 3.18 and 3.05 on the DHMO. So fortunately, because of past decisions made by this board, we were able to minimize the increase of such a larger increase. The County of Tulare also participates in the Medicare program, and a 7.7% rate decrease was shown there. When asked why the Medicare rates are going down, Kaiser responded with that Medicare actually is giving a greater reimbursement for their portion, thus putting its members out less cash. And so with that, the rates went down. We expect that level to be maintained. We don't expect it to be just a one-year deal where rates will shoot back up the next year. On the Delta Dental, as you can imagine, our self-funded program, because of COVID, significant rate decreases, even after we include the margin for COVID in there. And the DHMO is under a rate guarantee for the second year, as is the vision plan. So all in all, if you look at for County of Fresno, the total program is going from about 86.1 million to about 89 million, an increase of about 2.9 million, or the 3.41% that I mentioned. County of Tulare is a $34.5 million program, reducing about $1 million to a 33.5 for a minus 2.91. And that leaving the SJVIA in total at about 1.6. Next page, please. We, for County of Fresno, we provided 2 renewal options. One was just accept the underwriting as it's shown for 3.41, or the other one is applying cross subsidies between the PPO, the high deductible, the EPO, the self-funded dental, and applying Kaiser, the parity to the EPO and the Kaiser plan. That is identified as option 2, and it is the option that County of Fresno would like to implement, which means that the EPO and the Kaiser plan receive a 4.03% rate increase, while all other rates remain the same at 0% change. That then would would still give us give the SJVI the required funds for 2021 of 3.41%. Okay. And now, if we go to the County of Tulare, we prepared 4 different options. Option 4 is the one that was taken, and you can see it's actually a minus 3.2, which is even greater, and that is because in the current year, there are reserve accumulations that are being realized that are not necessarily, I would call it an excess accumulation, not necessarily one that is towards any other coverage. And that is, for instance, on the Kaiser plan, the rate was held, but what was remitted to Kaiser was less. Therefore, an accumulation could be applied. And through that, we're able to apply those dollars that were reserved and accumulated this year into next year's renewal to basically buy down the renewal somewhat further. The requested action is that the self-funded medical plans receive a minus 4.11%, that the Kaiser plan increase 3.14%, and that all other, the dental and vision remain at 0, for a total of a minus 3.2, or approximately $1.1 million decrease from the current rates. I can go into further fixed costs and so forth if you'd like, but that really concludes the rate action that both counties would like to entertain. I can either go into further explanation or entertain any questions at this point.
Let's see, questions, comments by members of the board or public?
Chairman, if I could just ask a question of Borden for the record. Borden, can you clarify, when you talk about the reserve that's built into these rates, at the last board meeting, the board talked about where we had been prior as far in months, as far as the reserve built into the rates, and there was direction given to increase that for these rates. Can you comment on that, please?
Correct. So prior to last month's board meeting, the mandate that the board gave us was to, 1, fully fund the IBNR liability, 2, establish a 1-month stabilization reserve. And I'll comment that it's not the recommendation from the consultant only to have 1 month. Ideally, we would have 3 to 6 months, but we're taking this, if you will, at baby steps at a time. So get the 1 month and then the priority was the loan repayment. At the last board meeting, one of the things that the board asked us to do is to, one, fund IBNR, but two, accumulate a 2-month, the stabilization reserve, move it from 1 month to 2 months. And after that, then we would look at loan repayment. So if I could just kind of, you heard the IBNR agenda item, and if we round that number to a $7.1 million, so funding IBNR requires $7.1 million. Based off of the renewals that we outlined today, a 1-month stabilization reserve represents $6.8 million. So to achieve a goal of a 1-month stabilization reserve and funding IBNR, we're looking at $13.9 million. Increasing that reserve, or increasing the accumulation to a 2-month stabilization reserve, would move the accumulation requirement from 13.9 to 20.7%, $20.7 million. As you heard me previously state, over the last 3 years, we've accumulated those funds, but that does not take into consideration deficit positions that we were in 2018 and so forth, as the auditor has always given us. So from the perspective that I'm looking at this, we can certainly, there's not a need necessarily to change any strategies relative to accumulation of margin reserves and so forth. We can continue the current strategy and accumulate. And I really think the final call is with the auditor's office relative to, okay, if IBNR is $7.1 million and stabilization is $6.8 million for 1 month, to let us know the exact accumulation that we have to date. But based off the numbers that I have, 20.7 million, we've accumulated that over the last 3 years. So technically the money's there, but however, you have to deduct from that the 23.2 monies that were used for deficit positions and so forth that the auditor's taken monies out for.
So board, bottom line is we're making progress, but based on your recommendation of where we should be for a stabilization reserve, we still have work to do to get to the position where we should be.
Correct.
Okay, thank you.
And just for clarification, I believe at the last board meeting, we asked for staff to come back with options as far as what that looks like, whether it was 3, 4, 5, 6 months, as was recommended. So I still think that would be good to see that in the future, to see what that looks like and what that would cost and how long that would take for us to get there.
I can share with you that a stabilization of 3 months, which is typically the minimal threshold that you want in a self-funded program, that's $20.4 million for the SJVIA. You add on top of that the IBNR, so that becomes a number that is 27.5 million.
Right. Any other questions, comments? Seeing, hearing none. This is action item. Entertain a motion.
Move approval.
We have a motion to approve staff recommendation. Just for clarification, Fresno County's option 2 and Tulare County's option 4. Is there a second? I'll second that. We have a second. We've got a motion by Supervisor Shucklin, second by Supervisor Vanderpool. Please call the vote.
Director Brandow.
Yes.
Director Crocker.
Aye.
Director Magsig.
Aye.
Director Mendez.
Yes.
Director Pacheco.
Yes.
Director Shucklin. Aye. Director Vanderpool.
Aye.
Motion passes unanimously. We'll go to item 13, receive and accept Empirix's 2-year contract and all the other things associated with it.
All right. Our Empirix, or the SJVIA's Empirix contract is set to expire at the end of this year. Staff requested that we enter into a 2-year contract for the next 2 years with the Empirix. And the Empirix offer, if I could, has tremendous enhancements over its current contract. Our guaranteed rebate amounts are much higher, as the chart demonstrates that you're looking at. If you could go to the next chart there, you can see we're going to be getting better discounts, 0.5% on the mail order brand. On generic, we got a percent improvement. When we go retail, right now we were guaranteed a 16.75%. We're going to get 17, so a 0.25% better there, and 81 instead of 80% on the generic discount. And you can see the other discounts as listed down below. And if you go to the final chart, what that means is not only are they offering a 2-year contract, but they're willing to take the current arrangement and do it retro to July 1st of this year. So we would actually benefit during the second half of this year under the contract. It is estimated that we will have a total value of $534,000 just in 2020. That's an increased savings over our existing contract that we have with them. And you can see 2021 and 2022 as well, such that over 2.5 years, we would be, we're estimating an additional $2.8 million in savings based off the new contract. So staff recommendation is to accept the Empirix PBM contract through the 2022 plan year.
Questions, comments for staff?
Mr. Chair, a question I have, Borden, did you guys, how did you arrive at this renewal with Empirix and not go through a bidding process? Is this just a common vendor you work with, or did you go through an internal vetting to get to this point and recommend this furthering of our contract with Empirix?
So yes, so part of our, we did not go out to bid. The going out to bid was something that was looked at earlier this year, but quite candidly, COVID was such an issue that to do a bid, to go out to bid and do a market check at that time, it's not something that SJVI staff wanted to follow that direction. Empirix has been a tremendous partner, but not only that, we also have the Keenan Pharmacy Services. They're the ones that actually negotiated this contract. This is an area outside of my expertise. So they were able to, and it's based off of the actual, they go through all the prescription drug utilization data, come up with areas where they want to basically negotiate with Empirix relative to the increased levels that are being realized. So it was a negotiation. Empirix is a preferred vendor, and the Keenan Pharmacy Services is being considered under to continue in its relationship as well too with the Empirix contract.
Director Vanderpool, I'll just jump in from a staff perspective, and we, share the perspective. We want to make sure that this is marketed to other pharmacy benefit managers. Just to clarify, the MPRX contract was actually technically a 5-year agreement. It had the 2 optional 1-year renewals. So in the end, we're kind of getting the savings for 2 years. They actually wanted to go longer. In our staff's discussion with Borden, we did not want to go longer than the original contract. We want it marketed before the end of the contract, so we see a full bid. And frankly, outside of this COVID timeframe, we think we'll have a better opportunity to vet that. So that there was some good discussion about that.
Yeah, and don't get me wrong, I appreciate them coming forward with this offer and going retro on the benefit. I think that's a great gesture, but at the same time, I want to make sure that we're always evaluating options and bringing the best deal forward.
Agreed.
Yeah. So we would anticipate, like Paul mentioned, in the year 2022, that we would do a full PBM marketing at that point in time and vet the entire market for the benefit of the SJVIA.
Great. Thank you.
Any other questions, comments regarding this item? Members of the public? Not, there's an action item. Entertain a motion.
Move for approval, Mr. Chair.
We got a motion by Supervisor Vanderpool,
Second.
second by Supervisor Magzig. Please call the vote.
Director Brandau,
Yes.
Director Crocker,
Aye.
Director Magsig,
Aye.
Yes.
Yes.
Director Pacheco,
Yes.
Director Sheklian,
Aye.
Director Vanderpool.
Aye.
Motion carries unanimously. We'll go to item 14, director questions, announcements, activity reports. Does any director have anything for the good or bad of the order? For staff, is there any opportunity on COVID testing kits or cartridges or rapid testing? Is there anything that SJVIA can do or have access to? I know that individually our counties are doing what they can, but is that something that SJVIA might do?
I'll just, Paul Nerlin, SJVI manager. So we get monthly reports that give us an idea of what's happening for COVID testing within the current medical network that hits SJVI claims. In addition to that, I know each county may be doing a little bit differently. At Fresno County, we're doing some on-site testing, but in certain departments like our law enforcement, our jail, where there's more incidents of exposure, but we're doing that using separate CARES Act funding, and would probably look at the same here. The other thing I'll just mention that is an opportunity for both counties is flu shots is being emphasized by both health directors at Tulare and Fresno. And there's an opportunity for us to partner with our health vendors to try to get that to all employees of each county. So that's just another area where we may partner with SJVI resources and still be able to potentially tap into CARES Act funding if that's available to offset that. So that these are two opportunities we're looking at right now.
Very good. Anything else? Appreciate that. Now we'll go to adjournment, and this meeting's adjourned. Less than an hour.
Fantastic job.
It was all for you, Brian.
Take care, Borden.